Assalamu alaikum. Welcome to our fourth accounting teleclass. I'm Naira Nasir from Kala Fund School and I will be taking today's accounting lesson. So, in today's accounting lesson, I will be mainly focusing on limited companies and ratio analysis both. The learning objectives of today's session is, by the end of today's lesson, students will be able to prepare an extract of statement of financial position of a limited company, and after that I will be doing a past paper question from both limited companies and ratio analysis. So, before I start with the statement of financial position, I would like to recall the previous day's lesson. In the previous day, we have learned how to prepare the statement of changes in equity of a limited company. Statement of changes in equity is prepared to know or to explain how our funds has been used in the business. So, we have a share capital column, general reserve and retained earnings column. This is the total reserves and the share capital here. So, first we write the opening balance of share capital, general reserve and the retained earnings, and after that we check whether there is any new share issue in the business or not. Then once we find the new share issued, we write the profit for the year. Here students, you need to be very careful when you write about the profit of the year. Profit of the year means after deducting the debenture interest and preference share dividend. So, it will be mentioned in most of the questions whether it is before the preference share dividend or after the preference share dividend. Then after that we will be recording the two types of dividends, that is the interim dividend and the final dividend. Here also, if you are not given the two dividends in the same question, you don't have to worry about it, you just take the dividend which is given in the question. So, in some of the questions they might just give you the interim dividend, there might be no final dividend also. Then at last we take the transfer to the general reserve and finally we make the total here. So, before I explain the statement of financial position of a limited company, I would like to recall the statement of financial position of a sole trader business. In a statement of financial position of a sole trader business, first we record the non-current assets of the business. So, first write all the non-current assets and then after that you will be calculating the total current assets of the business, and you will be adding both non-current assets and current assets, and that will be the total assets of the business. So, we mark it here as total assets. So, that's the first part of the statement of financial position. Now, what is the next part here? The next part of the statement of financial position will start with equity and liabilities. In equity and liability, first we show the equity part here. Under this equity part, the first one is the owner's capital. So, we take the opening capital of the business here in the second column, and then to this we will be adding if there is any additional capital in the business. After that, if the company has made a profit, that profit has to be added to the capital, and if it is a loss, that loss has to be deducted here. Then finally, we will be subtracting the drawings. So, when you subtract the drawings here, the answer you get will be taken in the third column here. So, that is how we do the equity part. After doing the equity part, then we record the non-current liabilities of the business and the current liabilities of the business to get the total. So, that the first part of the statement of financial position and the second part will be equal here. So, today also I will be doing the same question which we have done in the previous lesson. So instead of preparing the statement of changes in equity, today I will be explaining you how to prepare the statement of financial position of this particular company AK Limited here. So this is our statement of changes in equity. We have already done this in the previous lesson. Now when we look at the statement of financial position of a limited company, the only difference here will be in the equity part here. See, in the sole trader business you can see the equity part is capital plus additional capital plus profit minus drawings. But here in a limited company it will be different. We will be providing a summary of our statement of changes in equity. In today's lesson, I will not be doing the whole statement of financial position of a limited company because the total assets and the current liability part is exactly same as the sole trader business statement of financial position. So the only difference is here in the equity part here. So I will be explaining how to do the equity part of a limited company. So let's learn how to prepare the extract of statement of financial position here. In a statement of financial position, we are showing the summary of our statement of changes in equity. You don't even have to look at the question once you prepare the statement of changes in equity here, because we will be recording all the items that we have already shown in the statement of changes in equity. For example, the first one is share capital here. So we will be writing each of these headings separately here. So first one is the share capital. So share capital is ordinary share capital here, and you need to transfer the total of 100,000 to the statement of financial position here, because you can see here that balance at 31st December it is given it as 100,000. And we are preparing the statement of financial position also for on the same date here. So ordinary share capital is 100,000, and this is where you have to record this 100,000. Then after that you can see there are the two reserves of the business. One is the general reserve and the other one is the retained earnings. So after ordinary share capital, we will be recording the total of the general reserve here. So you can see the total of the general reserve at 31st December 2019 is 23,000, and that total has to be transferred to the statement of financial position. And the last one here is the retained earnings. So we will be taking the total over here also. So first write the retained earnings in the statement of financial position. Now transfer the total of retained earnings to the statement of financial position as 17,000 here. Now once you record the three items in the statement of financial position, you need to show the shareholders fund as well. So the shareholders fund is 140,000 and it will be transferred to the third column. The total will be transferred to the third column. As you can see, the total of these three things, 100,000 plus 23,000 plus 17,000 will give you 140,000. Just writing the total is not enough here. You also need to mark this amount as the shareholders fund, as this 140,000 represents our shareholders fund at 31st December 2019. So there is an advantage for students here, because even if your statement of changes in equity is wrong also, if you transfer the same totals to the statement of financial position, you will be given marks for this as on figures here. So you can score marks here even if the statement of changes in equity is wrong also. So make sure that you transfer the total that you have got in the statement of changes in equity. So after finding the shareholders fund, you need to check whether there is any non-current liability in the question given or not, because we don't record any non-current liabilities in our statement of changes in equity. Now let's look at the question here. You can see that there is a debenture of 50,000 given in the question here. That means this is our non-current liability for this company. So here under the heading non-current liabilities, you need to show the debentures 50,000, and once you record this debenture here, you need to add the shareholders fund with the non-current liabilities. So the total you get over here, that is 190,000. This is defined as the capital employed the business. That means that is the total fund of the business. Okay students, so now we are going to practice a past paper question. So this is a limited company along with the ratio question here. This I have taken from February March 2018, that is 045222. So before we go ahead with the question, it is very important for you to read the question carefully, because some of the time students feel that it is not important to read the question, so they just start answering the question before understanding the question properly. So first step is to understand and read the question carefully here. Then after that you start the question, and when you start the question you should know what they are exactly asking you to do here. For example, in this one, see, you can see complete the following statement of changes in equity for the year ended. So here you are going to complete this table. They have already drawn the statement of changes in equity for you, and some figures are also given here. So you need to fill up the space given here. So in this question, ABC Limited has a share capital consisting of ordinary shares, and the financial year ends on 31st December. So this is also a very important point to remember here. You need to identify your financial accounting year. So in this question, the financial year ends on 31st December. Then the accountant had prepared the income statement for the year ended 31st December 2017, which showed a profit of 21,000. You need to underline all the important points given in the question. Then the accountants started to prepare a statement of changes in equity, but was taken ill before it was being completed. So here they are asking you to complete the statement of changes in equity given. So recall the previous lesson, we have learned how to prepare the statement of changes in equity here. First, they have recorded all the opening balances here in the question. Then the second one here is the share issue. You can see there is an additional share capital of 20,000, which means that during the year they have sold additional 20,000 shares. So we need to take this 20,000 to the total column here. So write 20,000 here. So once you take the total, the second one is about the profit for the year. You can see in the question there is nothing given about the profit for the year, but when we read the question, we have seen that they have given the profit for the year. So the profit for the year was given as 21,000, and in this question they have not mentioned about the preference share dividend and the debenture interest. That means this profit is after preference share dividend and debenture interest. So profit for the year will be related to which column here? Profit for the year will always be related to our retained earnings. So this has to be recorded in the retained earnings column. So profit for the year here is 21,000. So let's write 21,000 here. And this total has to be recorded in the total column as well. So now we are done with the profit for the year also. Then what is the next step here? Recording the dividend. See, you can see that there is a deduction of 7,200 in the total column. That means they have paid a dividend of 7,200, and this is the final dividend here. Both the final dividend and interim dividend will have the same treatment, because dividend is given from the profit, which means that once the dividend is given, our retained earnings will also reduce. So here we need to deduct both final and interim dividend. So here you write 7,200, keep it in within brackets, and then 6,000. This also you need to deduct here. Then the final one here is transfer to general reserve. Now when they have recorded the transfer to the general reserve, we can see that they have included the 2,000 in the general reserve column. So they have, and that means there is a transfer of general reserve during the year. So this 2,000 will actually be taken from the retained earnings here. So 2,000 needs to be deducted from the retained earnings, then it will be recorded in the general reserve column. So there won't be anything in your total column here. So once you fill up all the spaces required, and if you write all the required amounts in the appropriate columns, you need to total all the columns here. So first column here, the total is 180 plus 20,000 will give you 200,000. So here we have to write 200,000. And in the general reserve column, you can see there is a 25,000 and a 2,000. So when you add both, you will get a total of 27,000. In the third column, in retained earnings column, you need to add 9,500 and 21,000 first, then subtract 7,200, 6,000 and 2,000. So the answer you get over here is 15,300. Now you need to find the total of this column as well. So here what will be the total? In order to find the total over here, you need to add all this. So when you add this column, you will get 214,500 plus 20,000 plus 21,000 minus 7,200 minus 6,000. So the total over here is 242,300. So once you find the total in the total column here, you also need to cross check whether your total is correct or not. That is by finding the total of your horizontal row here. This 200,000 plus 27,000 plus 15,300 will give you the same answer. So the answer you get over here, this 242,300 is your shareholders fund. Now looking at how the marks were given, there is a 6 marks allocated for this table here. Now let's see how the marks were given here. So how marks has been allocated for this question here. See, there is a 6 marks given here. So 1 mark will be given if you have transferred this ordinary share capital of share issue correctly in the total column. So this is 1 mark. And the second mark is allocated for profit for the year if you have taken profit for the year correctly in the retained earnings column as well as in the totals column. So this 1 mark is given for both of these columns. If you miss writing the retained earnings in the total column, but if you have correctly entered it in the retained earnings column, you won't be given any mark for that, because this 1 mark is given for the correct treatment of profit for the year here. And then 1 mark is given if you have shown correctly the interim dividend, final dividend in the retained earnings column, and if you have recorded general reserve also in the retained earnings column. If you see, if you have not written anything over here in the total column also, it will be fine. Then 1 mark is allocated for this total here, the shareholders fund. So this is the figure where they have given the own figure marks here. So even if the total is wrong also, for your workings they will be given the marks here. In the second part of the question, they are asking you to suggest 2 reasons for the change in the percentage of profit for the year to revenue. Percentage of profit for the year to revenue means they are talking about the net profit margin here. So we need to compare net profit margin for 2 years here. So when you compare the 2 years, they are asking you to write the reasons only. They are not asking you to mention about the changes here. So that is a very important thing to remember here. If you write that net profit margin was increased from 2016 to 2007 means you are not giving a reason here. So the reason, what could be a reason for improving the profit margin of the business? That is what they are asking. So what could be a reason? One reason for increasing the profit margin of the business is gross profit might have increased. Also, it could be that the business is having a better control over the expenses here. So when the expenses of the business decreases, the profit will increase. So as the profit margin will also increase here. In the third question, state the year in which ABC Limited had better control of the expenses, giving a reason for your answer. So here they are asking 2 things here. First thing is about the year here. So first we need to compare both the years. So you can see that the profit margin is more in 2017. So here first you need to write here it as 2017 in the year column, and you will be given 1 mark for that. In the second part, they are asking you to write a reason for the answer. Before you write the reason for the answer, you need to calculate the percentage of expenses to revenue. So that can be calculated by comparing the gross profit margin and the net profit margin here. So first one, in 2016 it is 32% and profit margin is 12%. So when we deduct these two, we get a total of 20%. And in this one, in 2017, it is 30% gross profit margin and 14% profit margin. So there is a 16% of expenses to revenue. So you can write the reason here as in 2016 expenses to revenue, percentage of expenses to revenue is 20%, while it was decreased in 2017 as percentage of expenses to revenue is 16%. So here are some of the past paper questions that I have taken from ratio analysis and limited company. You can keep practicing these questions at home. So that's all for the day. Wish you all the best. Thank you.